Good afternoon, everybody. So I'm going to talk about a subject that undeniably touches everybody in this room, which is healthcare, the one thing that we will all consume, whether we want to or we don't, and which represents a very exciting investment opportunity for everybody. So I'm going to talk about the BB Healthcare Trust. This product is managed by Bellevue Asset Management, which is a Swiss boutique asset manager. About 2/3 of our assets are in specialised healthcare funds. We do everything from venture capital, private equity, debt, all the way through public equities. We have about 18 different healthcare funds. This one is quite unusual, not just within the Bellevue franchise, but also I think within the overall world of healthcare funds in both open and closed-ended, in the sense that it combines a concentrated bottom-up stock-picking approach with a thematic overlay. And that thematic overlay is essentially that the healthcare systems of the developed world are fundamentally broken, and they need to be reimagined and made fit for purpose in the 21st century. And I will explain why. So first, let's start with the good stuff. I would say, undeniably, of everybody that's going to present at this event today, I am the one who is most bullish and most confident about the long-term growth opportunity for my industry, for a number of very, very simple reasons. There are ever more people in the world. Those people will need healthcare. The world is getting ever richer, and if you think about countries and as they industrialise, once you have food in your belly and a roof over your head, you have the opportunity to worry about remaining well. So you see an increasing proportion of GDP as GDP rises going toward healthcare. The population is also ever older. And if you look at the bottom left-hand corner of this slide, you can see some data there on chronic medical conditions. So a chronic disease is basically something that happens because your body's wearing out. It cannot be fixed. It has to be managed for the rest of your life. And if you get to the age of 65, retirement age, no longer arguably economically productive in terms of paying significant tax and stuff, 85% of the population have at least one chronic medical condition. £7 in 10 spent by the NHS today is on chronic medical conditions. So we have this fantastic demand outlook, and we can be confident for as many decades as we want to move forward, there will be ever more demand for these products, services and technologies. In addition to that, because of scientific progress and unpicking the basis of biology, there are ever more opportunities to cure and treat people with different maladies. So all of that is wonderful. The other thing about this, which is great, particularly in the current geopolitical situation and people worrying about inflation and stagflation and things like that, is the chart on the far left-hand side here. This is an uncorrelated sector. It is defensive. It doesn't matter if there's a recession or the economy is booming, people will always get sick and they will always need healthcare. The challenge is, though, when you ally that continued demand, the innovation generating more demand, the fact that the population is aging, what you end up with is a situation where healthcare cost inflation exceeds CPI. So what that means is, for as long as you want to look back or as long as you want to look forward, an increasing proportion of GDP, an increasing proportion of our wealth is going toward paying for healthcare. And if we don't do something about that, we're going to have a big problem, because it will consume all of our marginal wealth creation, or we will underinvest in the system, which is what's happened in the UK. If you look at the data, basically, although healthcare grows in real terms in this country, it grows about 1% a year slower than it needs to maintain service levels. So as much as all of you might love the NHS, I think we can all probably agree that the service it gives you all is pretty rubbish. And if you don't believe that's the case, try and get an appointment with your GP. Now, if you look at healthcare, there are some interesting opportunities here. This is an industry that really came of age after the Second World War. So the system we have today was designed for a population who weren't this old, who didn't have chronic diseases, and were much younger in aggregate. So what we have is a system that is incredibly wasteful. 1 in 4 appointments in the UK, either with a hospital doctor or a GP, are deemed to be not medically necessary after they've taken place, which is a bit of a problem. 1 in 4 pounds spent in healthcare around the world is wasted. No medical benefit whatsoever. And if you are one of those dedicated people who spent 7 years at medical school or 3 years training to be a nurse, you will then spend 30% of your time doing paperwork. They don't tell you that when you apply. So there is plenty of opportunity to transform healthcare, to make it work for us as a society, and to make it work economically as well. So how do we think about changing healthcare? Well, first we need to understand where all the money goes. So many of you will have investments in the healthcare sector, probably direct investments. Most of those will be in pharmaceutical companies. That accounts for about half the market value of investable healthcare, or medical technologies, your GlaxoSmithKline, your Smith & Nephew, those sorts of things. Now that's about 14% of the $10 trillion pie of healthcare. As you can see, the vast majority of it is in the intersection between the patient and the physician. And up to now, you haven't really had the opportunity to invest in companies that are delivering transformational change in this whole area. And that is why we created BB Healthcare, to give you the opportunity to participate in an inevitable and necessary revolution in the care paradigm. So let's talk a little bit about what the future of healthcare looks like. Well, firstly, it has to look completely different, because if we carry on as we are, the system is either going to bankrupt us all or it's going to break. And that is just the reality. Most of the changes that are going to happen have been enabled by technology, not just in the sense of technology helps us to do things we couldn't do before, but technology is helping us understand and evaluate what does and doesn't work in real time. So technology on both sides is transforming how healthcare works. We need to recognise some of the inequalities and realities of the healthcare system. We are all a product of our genetic heritage. You can't do anything about the genes that your parents gave you. Many of them are good. For all of us, some of them are bad. So there is unequal risk of disease when we start out in life. We can understand that. We can unpick this. Now, the UK, believe it or not, is a leader in this. First country in the world to move toward genetic screening of all live births in the country. But if we can identify precisely the people with the risks, we can act preemptively, preventative medicine, to try and get them not to get so ill and expensively ill later in life. We need to recognise that point about 1 in 4 appointments being unnecessary. I used to say the front door of the NHS has been wedged open for the past few years. Now you have to ring a bell. That's why it's more difficult to get a GP's appointment, but it's a necessary step in the right direction. Electronic triage, divert people away that don't need medical treatment. The other thing is we need to follow people through the system. You will be stunned at the proportion of people who don't go to follow-up appointments or don't get the care they need because they just get lost. We also need to recognise people are fallible. Now, many of you in this room are supposed to take pills every day. Maybe you've got high blood pressure, high cholesterol, osteoporosis, type 2 diabetes. And you know, and I know, that you don't take them all the time. And that's not your fault, that's just the reality of the human condition. Similarly, when you go and see the doctor, they tell you to change your diet or do physio or do something, and you don't really do it. So it's very, very difficult to be compliant. We need to recognise that. We need to give people tools to enable them to do better at looking after themselves. And part of that is knowledge as well. You only have to look at what happened with the COVID pandemic and the reluctance of lots of people to take vaccinations to understand how it's really important to bring people on a journey, to talk to them in a way that they understand and not be patronising, in order to get them to do the things that are actually in their own self-interest. And we need to get better at that. Acuity needs to change. I don't know if you know this, but if you go into a hospital and you sit down in a bed, even before anybody touches you, it's £600 to £800 a day. Now, you can stay in a suite at the Dorchester for that. I personally would much rather do that. The point is, if you've got people in hospital, you've already failed. They don't want to be there with all the other sick people. They want to be at home or in another setting. So we need to give people the opportunity and enable them to get more treatment in the setting that they want. And that applies particularly as well as the population ages towards social care and the institutionalisation of people as they get older. Connected care and the Internet of Things. Now, I've got a new kitchen in my house. Every gadget is Bluetooth enabled, so I can apparently have a conversation with my fridge or my oven or whatever it is. I have no idea why I want to do that. But if you put that in a hospital setting, it gets very, very powerful. Every single bit of equipment can report back on the status of a patient and what's going on. So many of you that have been in hospital many years ago, you'll remember sisters coming round in the night, waking you up, asking you if you're all right. Well, funnily enough, if they wake you up 3 or 4 times a night after a couple of days, the one thing you are not is all right. You can do all of that remotely. There's even mattresses now that can tell the ward managers what position somebody's in. So if you're supposed to be in a particular position because you've had an operation on your side or on your back or whatever, the bed will alert somebody if you roll over even in your sleep. So this connected technology, which all sounds ridiculous in your house, actually in a hospital setting enables you to manage the business and manage resource allocation in ways that were never even previously imagined. Now, as a consequence of all these things I've talked about, which are nothing to do with GlaxoSmithKline and Smith & Nephew and all those kind of boring but worthy companies that you probably do own, the reality is that the future of healthcare in terms of innovation belongs to a bunch of companies you've probably never heard of. And that's the really important point here. This is why you need specialist managers with active strategies to enable you to take part in this inevitable and necessary transformation in healthcare. So here we come to what I would think is the most important slide in this presentation. So this is a pictographical representation of the modern healthcare system. Hopefully you're all in that green box on the left-hand side. You're all happy, safe and well. But the reality is, because of those inherited genetic characteristics, because of those lifestyle choices, I know none of you smoke or drink, you exercise every day, you only eat healthy foods, but some other people don't do those things. Because of bad luck, you could go outside and get hit by a bus. At a certain point of time, you are going to have some symptoms, you are going to try and get an appointment with a doctor. Let's imagine you get that appointment, they will then diagnose you. If you think about the last time you saw a GP, they probably asked you, the person with no medical qualifications, what you thought was wrong with you, and then you went iteratively from there to work out what the problem is. They then give you a treatment paradigm of some sort. Usually the onus is on you, the patient, to do something without supervision to make you feel better. Now, most of the time they treat your symptoms. So actually, what the NHS is doing is it's treating you to the point that you go away and stop bothering the doctor. Most of the time we're talking about chronic diseases, you're not going to get better because that's just your body wearing out as you age. So you will recover, but probably not fully, and because most of it's chronic disease, as I said, eventually those symptoms will recur and the whole process begins again. Now on this slide, there are 21 bullet points. Each of those 21 bullet points is a product, service or technology that exists today and has been proven to improve the quality of care, lower the cost of care, or enable doctors to make better decisions. And all of them are featured in our portfolio. So this is the key as to why this fund is different to any of the other healthcare funds out there. We're not interested in what's in any benchmark. We're not even interested if you're a healthcare company or a software company or whatever it is. If you are a company whose primary rationale is to deliver these things that have been demonstrated to inflect the quality and cost of care, then we want to be invested in you. And that is how we run BB Healthcare. So our portfolio includes exposure to all of those elements. We select companies that are highly operationally geared into those trends. What does that mean in practical terms? Well, these are just some examples of those themes and companies that have been in the portfolio or are in the portfolio that address those particular things. And hopefully the message you will take away from this is you haven't heard of most of those companies, which is kind of the reason why I'm here, because our job is to do this selection and management on your behalf. Now, what this also means is you end up with a fund that looks very, very different to the benchmark or an ETF or whatever. Active fund managers charge fees. Of course we do. We have work to do. If you want to invest in a benchmark, go and buy an ETF. It's much cheaper. But you will get something very, very different, and that's illustrated on this slide. So we're much more small mid-cap focused, very US focused. That's because the US, for lots of reasons, is the cradle of innovation in healthcare. That's not going to change anytime soon. Very high active share, very concentrated portfolio. We cap at a maximum of 35 stocks. You can see the benchmark in contrast, very global, very much driven by a small number of mega companies, your Pfizers, your Johnson & Johnsons, your Novartis and so on. Now, healthcare, for the demographic reasons I talked about at the beginning of the presentation, has been unquestionably, after technology, the best place to be invested over the last however long you want to look. And as I said, I would expect those trends to continue. So even if you don't like anything I'm saying, please do go away and consider within your own portfolios having a significant allocation to healthcare. But this is also a very, very interesting time to look at this sector, because I've been doing this for 25 odd years and I have never lived through a period as weird as the last 6 or 9 months, and I shall explain why in a second. So bear with me. If you think about innovation and you think about companies, if you're a small company and you innovate, those things that you do are going to have a disproportionate impact on your ability to make money and generate revenue and things like that. If you're a mega cap company like a Johnson & Johnson or Pfizer, if you invent $1 billion product, does it really move the needle? No. So what you tend to find is if you measure over long periods of time, the money gets made by the small innovative companies, and that is at the core of our investment approach. And you can see on these slides that this is showing you small cap healthcare against large cap healthcare effectively. And you can see that generally small cap significantly outperforms. During periods of uncertainty and volatility, people hide in big, liquid, safe things. So you see these retrenchments, but then you see a very, very rapid recovery when the world starts to go back to normal. And bear in mind, all of this predates what we've seen happening in Ukraine. What we've seen over the last 6 months is an unprecedented relative devaluation of mid-cap healthcare. Now, There have been periods in the past where things like that have happened, but this is truly staggering its scale. So if you're as old as I am, and you can remember 1992, when Bill Clinton won the presidential election in the US, he appointed his wife, Hillary Clinton, as the healthcare czar, and they said they were going to nationalise the US healthcare system within 100 days. So this is basically the healthcare apocalypse. The sell-off now is even more acute and severe than what we saw in 1992. There has never been anything like this, and you can see it illustrated in a bit more detail. This is sort of showing you highs to lows on the left-hand side. So you can see there's various indices there, the Russell, the Nasdaq Biotech Index, and also the large index. You can see that this has really only punished small and mid-sized companies. Now, an obvious question is, has anything changed from a political or a regulatory stance? Is the world fundamentally a different place if you're a healthcare company, operationally speaking, than it was 6 or 9 months ago? And the answer to that question is unquestionably no. So I can't give you a cogent answer as to why this is happening. I am a passive observer of this. I find it fascinating, but I also find it an incredible opportunity. I think people will look back on this in 3 or 5 years and say, wow, that was a really opportune time to be exposed to small and mid-cap healthcare, which is exactly what we've been doing. So we're an investment trust. There are lots of things that are great about being an investment trust. One of them is you can use gearing to increase your gross exposure and take advantage of misallocations of assets. And you can see the severity of the performance impact from this short-term sell-off, but you can see over the longer term, the trust has done very, very well. And you can see how we're taking advantage of that by significantly increasing exposure. We are buying these things as fast as we can. I encourage you to look at our fact sheets. We write very discursive fact sheets where you can find all about what we think about healthcare. The other thing you'll find in there is that myself and my colleague Brett, who managed the fund with me, we've been buying a lot of shares in the trust as well, because I think this is genuinely a very, very interesting opportunity. Final thing I'd like to say to you all, because I know there's many private investors in the room and you probably care a lot about dividends. Now, dividends in healthcare is something you have to be very, very careful about. Dividend yield is something that lots of retail investors focus on. This is an innovative industry, and we'll come back to that problem of size. Imagine you're Pfizer. You're this huge company. You've got 30, 40, $50 billion of sales. You lose some of that to patents. You have to invent new products continually just to stand still. You're running to stand still. The problem with R&D is there's no evidence it scales. Absolutely none whatsoever. So what these companies do is they buy in things from other companies, either license them in or they acquire other companies. So if you look at Big Pharma, 25% of all the products that Big Pharma launches were not invented by Big Pharma, they were bought in or licensed from smaller companies, the kind of companies that we invest in. Now, the point about this is, if you pay out a large proportion of your profit in the form of a dividend, which both GlaxoSmithKline and AstraZeneca do, and of course you'll note if you own those companies that their dividends haven't grown for a long period of time, and this is why, you don't have any money left to make those acquisitions to buy in that innovation, so you go stale, and it accelerates all of those problems I'm talking about, failing to grow, failing to innovate. So when you are selecting direct investments, if that's how you like to invest, please do not look at dividends as an attribute for a company in this sector. There is lots and lots of data that shows you it does not work. And the US dominates this sector. The one characteristic that all the US companies have is they pay hardly any dividends at all and they buy back shares instead. So in as much as dividends matter to you, and I understand that, please don't use them as an investment criterion when picking stocks in this sector. How do we deal with this as an investment trust? Well, the simple answer is we ignore dividends in our investment process. Our organic yield is very low. What we do is we pay a dividend out of capital in order to ensure that investors have a growing, progressive and meaningful dividend from our strategy without us getting dragged into this darkness of focusing on dividends as an actual property of companies that, as I say, I think personally is extremely misleading. And if you are unfortunate enough to own any GlaxoSmithKline, you will know exactly what I'm talking about over the last 10 or 15 years, for example. Much better to focus on total return or some other kind of growth-related metrics. So in summary then, healthcare is unquestionably the secular growth story of our age. It is driven by inevitable and long-standing, durable trends. So we can be very, very confident on demand outlook. However, we do have to be mindful of affordability. Someone, at the end of the day, your children and your grandchildren, have to pay the bill for all of this. And that's getting ever more difficult, and it's also becoming less and less acceptable to society that so much of it gets wasted. So healthcare has to change. We've had this kind of Struthian political approach for decades in this country, where every politician kicks the can down the road and thinks this is going to be somebody else's problem. The NHS doesn't accept this anymore. It's published a long-term business plan. It wants to be a completely different organisation to what it is as well. So change is coming. That's an absolute certainty. That's great news for society, but it's also great news for all of you guys, because you can participate in the financial returns of the companies that are going to deliver these significant changes to the healthcare paradigm. And we are wrapping that all up for you in a global, unconstrained, UK-listed investment product. So we do all the hard work of trying to find the companies and managing all of that. What do you get? You get a UK, very liquid, equity investment that pays you a nice and growing dividend. And the exposure that you get is very, very different to what you could get by direct investments in the UK, because as much as we are paradoxically one of the world's leading institutions in the academic side of healthcare innovation, we are absolutely at the bottom of the tree in terms of IPOs, the size of the public sector and all those sorts of things, because the London Stock Exchange is not really a very friendly environment for innovative companies, as I'm sure you know. So if you have a UK tax base, if you're a UK-focused investor and you want to invest in healthcare, you're going to have to do it through some kind of a fund approach. Now, if you want to hear any more about this, please do go and talk to my colleague Simon King. He's down on stand M1 downstairs. And one final thing that I need to alert you to, the BB Healthcare Trust is actually changing its name in the coming weeks to the Bellevue Healthcare Trust. This is a corporate rebranding by Bellevue Asset Management. So you may have to search for it under Bellevue Healthcare Trust as well as BB Healthcare Trust. And that's it from me. Thank you.